Hello, it's Jeffrey Christian of CPM Group. It's just past noon on Thursday, August 3rd. I'm recording this for a release on Friday, the 4th August. I'll be out of the office Friday morning, so I'm recording this ahead of time. Gold, silver are down. They've been down for a couple days. Has to do with a variety of issues in the interest rate market and the economy. It's funny, our view of where the prices are going short term and longer term really are unchanged. And I want to talk about a couple issues that don't necessarily focus on the short term and longer term outlook for gold. I guess the longer term they do apply. Issues that people have asked me to focus on a little bit. I will say this, there have been people who have said, oh my God, obviously the powers that be have slammed down silver. And it's like, no, if you look, what we're seeing is lower prices over the last couple of days, not in gold and silver, but in gold and silver and platinum, palladium and copper and oil and the stock market and corporate bonds. It's a much broader issue. It has nothing to do with silver and gold per se. It has everything to do with the broader financial markets. I wanted to talk about gold investors, gold investment demand, and a gold standard. And I'll get into that in a second. And then I also want to talk about the FedNow bugaboo. And it is a bugaboo. And I'll explain why that is, although I've already explained it several times in recent videos. I showed you this chart in the Tuesday video this week. This is the US dollar and gold purchasing power. In other words, real dollar exchange, the real dollar depreciated by inflation, and also the gold price. And it goes back to 1800. And I pointed out that, yes, since 1898 and the Spanish-American War in that year, the dollar basically has depreciated. And I also pointed out that you see several sharp spikes down that basically represent wars: Civil War, Spanish-American War, World War I, World War II. And I also pointed out that you had seen a much bigger percentage decline in the dollar's purchasing power prior to 1913 and the creation of the Fed and the onset of World War II than you've seen since the end of World War II. So you can't really blame the Fed for depreciating currency. And I explained why in my earlier video by showing you also the British pound, which this goes back to 1700, and it also has depreciated consistently over time. Currencies, including gold and silver, depreciate over time in terms of their purchasing power because of inflation and because interest rates reduce the value of each unit of whatever currency or gold or silver it is. So that's very important to bear in mind. Now, I wanted to talk about the gold standard and gold investment demand. The orange line here is the nominal price of gold since 1700. And you can see it was basically flat until we went off the gold standard in 1971. There were a couple blips that don't quite show up here. The Napoleonic Wars, World War I, World War II, the Great Depression. And then the real price, the purchasing power of gold, has depreciated consistently from 1700, when this data starts, up until 1971. It has recovered somewhat since 1971, and it's back to levels that we saw in the late 1940s. Right? But the purchasing power of gold has fallen. The nominal price has been flat. You will find gold investors and gold enthusiasts who will talk about the need for returning to a gold standard. A gold standard is not what a gold investor should want, because a gold standard, regardless of how you create it, would have a fixed gold price on nominal terms. And that's what you see here. So if you went to a gold standard with a fixed gold price against currencies or a given currency, what you then have is it's not an investment. It's a store of wealth that depreciates in purchasing power over time by virtue of inflation and interest rates, interest-bearing assets. Gold, under a gold standard, is not a good investment. It's not even an investment. It's a form of currency, and it's a way to store wealth on a depreciating basis. Gold, not on a gold standard, is an investment. And you can see that since 1971, fortunes have been made and lost by investors investing in gold. Back in the 1980s, I remember having a conversation with someone, and I said, it's very strange because you have this cognitive dissonance on the part of many gold investors who are very much interested in investing in gold, but they also are very adamant that we must return to a gold standard in order to have economic stability. And I thought there was this weird cognitive dissonance between those conflicting views. And the person that I was saying this to, who had been in the gold business longer than I had, at the time I had only been in the gold business for about 8 years, said, Jeff, it's not cognitive dissonance. There's no cognition involved here. These are beliefs. So it's weird that you find people who say we have to have a gold standard, and I love gold as an investment. If you go to a gold standard, gold's no longer useful as an investment. Also, I will point out again that insofar as you talk about gold as a store of value or necessary to have a gold standard for economic stability, every gold standard that has ever existed in the last 6,000 years has collapsed. And none of them prevented inflation, depression, and other economic problems. So a gold standard is not a cure-all for economic stability, instability, and volatility. If you want to cure that, you have to have ethical politicians running your government and running a balanced fiscal market. That's what you need for reduced economic volatility. Now, speaking of economic volatility, that's a good bridge to my next subject. And I showed you this chart, I believe last Friday. This is real U.S. GDP since 1850. And you'll have people who will tell you that the U.S. economy has been much more volatile since the creation of the Fed. And all of this volatility has been caused by the Fed and its monetary policies. Now, all of that is nonsense, and none of it stands up for economic scrutiny. And it's worth paying attention to. Again, if you look at the 69 years from 1850 till 1919, so basically a period of time leading up to the creation of the Fed was authorized in December 1913, and it was built out starting in 1914. You had 16 recessions that averaged 22 months long. They were very big. They were very deep compared to post-World War II recessions. And you also had periods of hyperinflation. So the Fed wasn't to blame for it. The Fed didn't exist. The Fed was created in 1913 because from 1907 to 1913, you had the U.S. economy in a recession, not just a single recession, but actually about 5 recessions. 60 of those 90 months. And it was because we didn't have a central bank, we didn't have a national banking system, we had state-chartered banks that were not regularly audited by state banking regulators, and there was a tremendous amount of misfeasance on the part of banks. So that's what it was. If you go after World War II, because we had the Great Depression, we had the Roaring '20s, the Great Depression, and then World War II. And if you pick it up after 1945, you'll see 11 recessions, 10 months on average. Shorter shallower, less destructive recessions after World War II. Now, that's very important to understand because I want to make the next point talking about FedNow. You have economic empirical data showing you that we have had a less volatile economy since World War II. And you have people who will constantly tell you that it's the Fed's fault for all of the economic problems that we've had since the Fed was created. And it's very important to understand those two distinct points. You keep hearing, I'm sorry about the title, you keep hearing about FedNow. FedNow is the gateway to central bank digital currencies. And central bank digital currencies are not a bad thing anyway. But again, the same people who keep blaming the Fed for something that doesn't exist and keep telling you that gold's going to $10,000, then it's $20,000. This morning I saw someone saying $40,000. And silver's going to be $1,000, not $100, not $50, $1,000. The same people who have been lying to you about this stuff their entire careers are now telling you that a central bank digital currency is going to be a completely terrible thing and it's going to lead to thought control and complete control of your finances and personal stuff. And that the newly created FedNow program that the Federal Reserve System has created is the entryway to central bank digital currency. This is from the Fed's website. Frequently asked questions. What is the FedNow Service? The FedNow Service is a program by which the Fed is allowing payments across the banking and non-banking financial system in the United States to be instantaneous. We've seen, we've gone from a place where, I'm going to send you a check, you'll get it in a week, and then you can put it in for clearing, and it'll clear within a week or two. You've gone from that period of time to Fed wires and ACH and electronic fund transfers, which can, in the early days, the 70s, 80s, 90s, it would take, a day or two to clear. Now you have a system where it can clear within a couple hours. And FedNow is the next step, which allows almost instantaneous clearing. That's what it is, right? It's a way to have a more efficient banking and non-banking financial system. And it's not open to the public. It's for banks and credit unions and non-bank financial institutions. There's no FedNow app. You can't have a FedNow thing as a consumer or a business person. Your bank or your credit union can use it. And it's not the gateway to a digital currency. Digital currencies are coming because the technology by which we all live is changing. But FedNow has nothing to do with a digital currency. Now, there will be people watching this who'll say, you're going to believe the Fed. And you each have to decide, who are you going to believe? Are you going to believe the Federal Reserve Board? Or are you going to believe people who have been lying to you their entire careers about the Fed, about the dollar, about gold, and about silver? It's for you to decide. I'll be back next week. We'll talk about some other things. I'm sure there'll be some topics to talk about. In the meantime, you can go to our website. You can buy our gold, silver, or platinum yearbooks for 2023. They're all out now. They're all available. You can buy them and download them from our website as ebooks. Each one is 200 plus pages. Authoritative work on the real gold, silver, and platinum group markets. You can read other things. There are free reads. There are videos and all sorts of other things. Information about CPM Group services, research, consulting, asset management, commodity management, investment banking, advisory services. You can read all about that at cpmgroup.com. Until then, have a good weekend. Take care of yourself and those around you, and try to do something good for the world. I'll see you next week.